We send out those newsletters every 15th and 30th of the month, so make sure to go to our website, northwestquadrantwealth.com, and add your email to our list, and we will get those videos. They're about a 5 or 6 minute video talking about what we see going on in the market, so get signed up for those. College football has officially started. High school football has started. It's going to be interesting to see. NFL season is about to kick off. It'll be interesting to see how this all goes. Right?
Did you catch the Sun Belt last night?
No, it's funny.
Thursday night, rather.
I watched some high school football games, like in Oklahoma or something. It was pretty funny to watch. They beat some of the college football teams here in Oregon. This comes from BTN Research. From the low on March 23rd of this year, through the first week of September, the S&P 500 has gained 56% total return and set 7 all-time closing highs. So the market, to say that this has been a rip higher is an understatement. And we've talked in the past about probably why that is, where we had the U.S. economy in the second quarter declined by about $680 billion on an annualized basis. That $680 billion is probably about $1.7 trillion, give or take. And the United States' response to that was $6 trillion. And so obviously that's going to be very good for financial assets, which is why you're seeing stocks go higher, why you're seeing houses go higher, why you're seeing things like boats go higher and cars go higher. And not that those are appreciating assets, but when you throw so much fuel on a fire, like the U.S. government has done, that's why you see asset prices go higher, as higher as they have. I mean, one of the things that we used to do in this country is have big infrastructure projects, those kind of things. But I guess those days we're just going to keep financial engineering like most corporations in this country.
Well, I mean, pretty evenly split between fiscal and monetary stimulus, and to the extent those direct payments recycle back into the economy,
yeah, but
up with the discretionaries.
It cycles back into the economy, ultimately ending up in Jeff Bezos' pocket. I mean, Jeff Bezos is now worth north of $200 billion.
Don't forget about the Waltons.
And he that was after giving $65 billion to his ex-wife. We've never seen you go back and you look at the steel barons and the railroad barons and the oil barons. We've never seen wealth like this in the history of the world. And it's really concentrating on the top. And some of this unrest we're seeing in this country has a lot to do with that. And if you want to know how it's going to play out, I think it's going to play out in the voting booth. And so we have to remember some of these things that
the Federal Reserve is the new kingmaker, so to speak.
Yeah, I mean, that's really not a joke. I mean, that's the Federal Reserve now is the most important entity in the world, and they are not elected officials. I mean, they are appointed, right? So
the sad thing is that you go walk down the street and ask the average person who's Jay Powell.
He's the most important person in your life. And
you get a 50% hit rate?
No, 10%.
Maybe 33?
10%.
Yeah.
The most. We should try that. We could be like the Howard Stern show and walk on down the street and ask questions.
Do a little segment about it.
All right. Let's talk about the market bifurcation that we're seeing and then most importantly, what you should be doing it. So in the first segment, we talked about this market is behaving very similarly to the late 90s where we're seeing a ton of concentration in a very small amount of names. I mean, we've seen, the S&P market cap be led by 5 stocks, the big tech names, and that got really exacerbated. On average, 30% of the S&P 500 is down. The stocks in the S&P 500 are down 20% or more. And so while the market is doing well, the whole market isn't doing well. And so we're seeing a lot of bifurcation. And, the one thing that I want to remind people of is when I look at names, and, we had some of these names report earnings, like a Zoom video, right? So Zoom now is used like, let's Zoom, right? It's just in the lexicon now. Yeah. And so... But let's take into consideration that Zoom has a market cap somewhere $130 billion market cap. I mean, 60 times revenue. For them to justify this valuation, they'd have to grow at 25% a year for 30 years, which we know is statistically impossible. Yet people are buying the stock. Another one,
and previously relatively reserved market commentators are now justifying that valuation.
Oh yeah, they come on, they parade them on NVIDIA. Another one, NVIDIA is a great business. They do make money. They have a great balance sheet. They have a $360 billion market cap, traded 106 times earnings. I mean, another one is Tesla. Obviously, they're the poster child. They are now bigger than Visa, Johnson & Johnson, and they're tracking down Berkshire Hathaway. They might be the 6th or 7th biggest company in the United States, and they haven't had a profitable year yet. And so,
the hoped for increase in car sales just hasn't materialized. I mean, the revenue is going to be down year on year.
Well, so the valuation, nobody can justify these valuations. They try to come up with all these different metrics, but you cannot justify these valuations. And eventually, economics matter, earnings matter, all these things come back to reality when we have some actual market forces being applied to the market. So if you remember the late 90s, Josh was in high school, but I was starting in the business, and we had names like Cisco, which still exists and is a great business. Cisco was trading at $600 billion in market cap. It's still not even approaching that. And this is 1999. 21 years ago, and so it's still not close to the market cap that it reached in 1999. There were names like Global Crossing, people remember that, JDS Unifees, had huge market caps.
The double-digit sales multiples of the 1999s look quaint relative to the triple-digit price-to-sales multiples that you see today.
Yeah, I mean, the name that is we've never seen anything like it is Tesla in terms of the crazy valuation. And you can say all you want that we don't know what we're talking about, that Buffett doesn't know, all these people but if all of these businesses were private businesses and you actually had to own them and use the cash flow to run the business, they would be insolvent. You wouldn't be able to do it. I mean, there would be if you had to go buy them, it would make no sense for you to buy them. But even like a Tesla, if it was a private business, the only reason they can keep going is they are using their giant market cap to continue share issues so they can keep the business running. It's this giant Ponzi scheme.
When the question that we had when we were talking about it this week, Tesla did a $5 billion share offering, but they did what's called an at-the-market offering. So they're actually selling the shares essentially to retail bidders. No legitimate business actually does an at-the-market offering. They always do secondary offerings. The reason they do secondary offerings is because they go and they roadshow it, and institutional investors ask real questions. Tesla can't do that. It still has negative free cash flow. So they're just selling shares to
the next bozo,
unsuspecting retail bidders. But the reality of this is, like, if they had just gone off the deep end and did say $20 billion in market offering, they would have had a fortress balance sheet all of a sudden.
So here's the most important thing. The most important thing for you, though, as the retail investor, forget all of this. Hopefully you're not participating in this. When this does end, which it will, if in the late 90s, just like we are seeing now, if you own value, high quality stocks, you don't have a portfolio full of tech stocks, you're diversified across market cap, meaning you own small and mid cap stocks, you're diversified overseas, we think that will provide you some protection when this thing goes south.
Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Northwest Quadrant Wealth Management, a registered investment advisor and separate entity from LPL Financial.